Next time I'll remember that.
Okay, thank you. We just have a couple more minutes and then we'll get started to be respectful of everyone's time.
Sounds good. We're missing John Fitzgerald, the home inspector, today.
We are, yes. Okay, so it's about 5 after 5, so we're going to get started just to be respectful of everyone's time. As you can see from the pictures, my name is Sheri and I am the residential lending specialist here at Achieve. And we would like to welcome you to our home buying webinar, our first of many, hopefully. Tonight we have 4 panelists that'll be giving us information about the home buying process. We have Mark Allenack from Allenack Mortgage. Say hi, Mark.
Hi.
We have Joe Schnell from Lux Realty, who is our real estate extraordinaire. Say hi, Joe.
Hey, everybody.
And we have Miss Mackenzie Angels, who is our attorney, who does a lot of wonderful work for our members here at Achieve. So we have a lot of great information for you this evening. We will ask that during the presentation, if you do have questions, if you would please chat those questions to us, and we will try to either answer the questions while we are at that part of the presentation, or at the end, there will be a question and answer session where we will hopefully get to all of your questions. Also, we would ask that if you would like to have a follow-up phone call, please chat us your name and phone number, and we will make sure that we reach out to each and every person so we can talk about your individualized situation. So what I'm going to do now is I'm going to turn it over to Mark so we can talk about all of our great mortgage programs that we have available here at Achieve.
Take it away.
Yes.
Well, thank you, Sheri. So usually we do these seminars live, right, in New Britain, which becomes fun for me. I like speaking in front of people. So this is kind of challenging for me. I've done some Zoom calls, but I like the interaction part of a presentation more than just presenting. So bear with me a little bit on this. I'll try to keep it as interesting as possible. I'll keep Joe smiling though, even though you can't see me right now. So a couple things, right? So as you look at this pandemic, right, there's just been a lot of challenges this year, right? So there's been a lot of bad, but you know what? There's been a lot of good too. So as we kind of look at the good things that have happened this year, you look at, well, now your bosses, people can work from home. They can work remotely now. And you know what? You can still be productive. So that's a good thing for people. I know I'm sitting at home in my office, which isn't a bad thing, but it's you know what? A lot of people are going to see different changes as we go through this. The second thing is you can spend more time with your family, right? So that's a good thing. And then the great thing is about these Zoom meetings is, you know, you can be in your jammies, you can do whatever you need to do to have fun with this. And Sheri's laughing because I think we caught her in one of her jammies on one of the calls. So that's why I brought that up.
Yep.
But the best thing that's come about through all this is interest rates. Interest rates have been at historic lows. And you know what? What's great about having low interest rates? It means you can buy a bigger home for probably the same price as if the rates were a little bit higher. So rates are great. That's fantastic. Good time to buy. I'll let Joe talk about the housing market. But rates are great, right? So we're talking today about getting pre-qualified for a mortgage, right? Kind of taking you through steps of, you know, one is I'm going to teach you about the products that we have out there. Two is we're going to talk about the individual products. We'll talk about how you can get pre-qualified, and then, you know, we'll kind of turn it over to Mackenzie and to Joe and let them talk about their respective fields. And then we'll hopefully have some fun with this. It's a little bit better when you guys can talk, but I guess we'll go with it, right, at the end of the day. So you guys are all on this call to get some knowledge, right? You want to get knowledge about buying a home and what's the process behind it, right? So there's a couple things that are involved with that, right? So one, you're probably tired of paying someone else's mortgage payment, right? Yeah, that's first and foremost, you're tired of paying someone else's mortgage. If you look at what you can buy a house for and what your mortgage payment is, it's probably pretty comparable to what your rent payment is. That's probably the first thing. The second thing is you might be living at home with mom and dad, and you're just tired of living there with them, and you want to get out on your own. That's another good thing. The third thing would be mom and dad are tired of you living there. It's time for you to spread your wings and move on your own. So there's all kinds of different reasons why you want to buy a home. Home ownership is a good thing. Owning something, not worried about, you know, paying rent, having a neighbor up next to you, where if you make a little bit of noise in your apartment, they're not calling the landlord on you. So that's a good thing too. So I'm going to take you through this deck, and I'm going to kind of talk about a couple of the products, all the products, I should say. And then I'll turn it over to Joe and Mackenzie, and they can kind of take you on your way with the buying process and the attorney closing process. So who's manning the, is Chris got the deck?
I sure do.
All right. So you can move forward. You can actually go to get qualified.
All right.
Awesome. So there's a couple factors that go involved with getting qualified for a loan, right? So there's a few areas that we look at. One, we're going to look at your income, right? We're going to look at your income to make sure you can afford to make the payment. So that kind of coincides with your debt. So based on your income and your debt and what your proposed mortgage payment is going to be, we're going to make sure you can afford it, because we can't give you a loan that you can't afford. There's laws against that. So we make sure that you can afford it. The other thing is credit. We need to make sure that you're credit qualified, where you actually show the ability to make your payments on time. And that's all reflected in your credit score. And then the last thing is assets, right? Do you have enough money to make a down payment and pay the closing costs and escrows associated with the mortgage? So those are the factors that go involved with getting qualified. And the next one's about the realtor. And I'm going to let Joe talk about that aspect of it. But I will tell you, personally speaking, that we've been doing this with Joe for, 3 years. Yeah.
3 years, yep.
And I can tell you that anybody that Joe works with, he's working for you. And that's a great thing. So he comes highly recommended from the credit union, from me, from a lot of people out there. So that's somebody you can trust, that's going to look out for your best interest. He's just not looking for a dollar to put in his pocket. He's looking at taking care of you and what you're looking for in buying a home.
Yep.
I probably did a pretty good job with you, Joe, didn't I?
Very good. Yep.
All right, good.
100% true. Yeah.
I can't say anything good about Mackenzie. No, that's a joke. So
that's okay. I can.
So Mackenzie we've been working with for quite a while, and I decided to bombard her with a lot of different closings over the last 6 to 8 months. And Mackenzie is one of these types of attorneys. I didn't even know she was an attorney, the way she handles things, because she's so efficient. She gets things done. She's always working. Email at 11 o'clock at night, you'd probably get a response. It's somebody that gets the job done, and we don't have to wait for her to do her job. In a lot of cases, when it comes to closings, you're usually waiting for an appraisal or a closing attorney to get the title work back. That's never the case with Mackenzie. She always has it back, and she's always ready to close for you. So two very important people in the mix of things, which, you know what, you guys have your choice of who you can choose. All I can tell you is these are two of the best. And you know what, you want a good closing, you want somebody in your corner. These are two people you want with you. So you can go to the next slide. Home inspector. So I'll tell you about home inspection. And I'll just tell you, personally speaking, right? I bought a few houses in my day. So I can walk into a house and the average bear like myself will go in and look at a house and I can only see the outside, right? The surface, the cosmetic work of something. You go, oh, this is really nice. But I don't know the underlying factors. And what a home inspector is going to do for you is they're going to look, I don't want to say, they're going to look under the hood, right, of a car. And they're going to basically see that house. They're going to look at potential problems now, and, you know, things that they could possibly, things that could be cured, and possibly what the cost could be associated with it. So you want to get into a house. When you see a house, you want to find out everything about that house that you can, right? Your real estate agent's going to have certain information, but the home inspector, they're going to dig into the nuts and bolts of that house and hopefully give you some really good information. And we do have somebody that does that for us as well. So let's talk about mortgage products, right? So you got a couple different mortgage products out there. You got conventional mortgages, which is your typical mortgage product that you have, right? You can go to the next slide too, Chris. So with this product, right, you can go up to 97% financing on a single family home. Typically it's, you can put as much down as you want, but if you're a first time home buyer, I'm sure you don't want to put a lot down, because once you get into a home, you're going to see that I want to fix this. I want to replace this. I want to put furniture here. You're not going to probably want to give away all your life savings for something as far as a down payment. If you got it, absolutely fantastic. That's a good thing. But it's a great product where your PMI is limited, and I'm going to cover PMI in about 2 seconds. Your down payment is minimum. So think about it. You're buying a $200,000 house. You put 3% down. You're putting $6,000 down to buy a house, right? What's associated with that as well is, don't forget about closing costs. Don't forget about escrows, right? Now, I'm not trying to scare you early, but down payment's one thing. Escrows are another, right? So in the great state of Connecticut, property taxes and all taxes are pretty inexpensive. And I'm sure you guys are all like looking at me like, what are you, crazy? A little bit, but property taxes are kind of high in Connecticut. So typically in most counties, right, taxes are paid every 6 months. So July and January. So when you come to closing, if it falls before those dates, you're going to potentially have to come to closing with up to 6 months worth of tax escrows to put into account to pay your taxes. So it's not just your down payment. You have to be concerned about escrows as well. As well as that, you're going to have your homeowner's insurance, which you got to insure your home. So you're going to have to look at least 1 full year up front and then a couple months in escrow on top of that. So closing costs will probably run you $300 to $3,500 plus your escrows plus your down payment. So remember those 3 things when you're buying a house. It's not just the down payment. Conventional financing, you also can do, up to 4 families, where in typical cases, 2 families, you can do up to 85%, and then 3 and 4, you got to put 25%. Gifts are allowed. So remember, we were talking about our parents, right? They don't want you around anymore. Hey, the great thing is they can gift you the money so you can move out. And you can say thank you on your way out the door as they give you the money. Other things on this program is, if you're putting 3% down, the Home Possible program is income driven, where there's caps on certain counties on how much you can make in those different counties. It's not to say that you can't get conventional financing for 95 or 97. This Home Possible program is geared towards income. And I'm trying to think, Hartford County might be like 82 grand a year, I believe. If you make under that, you get a little bit better on your PMI. You get a little bit better on your interest rate. Private mortgage insurance. If you're not putting 20% down on a conventional loan, the lender's going to require you to pay private mortgage insurance. And basically it insures the lender against loss. That fee could range anywhere from 0.25 up to 1.25. It's all dependent on your credit score and how much you're putting down. Example, if, for example, you buy $100,000 house, let's say your mortgage is $100,000 and it's 0.5% for PMI. So 0.5 times 100,000, That's going to be $500 for the year. Divide that by 12, $60 a month is going to be your payment. I think I did that correctly. I hope, or close to. So PMI is another part of your payment. So you're going to have your principal and interest. You're going to have your homeowner's insurance. You're going to have your property taxes, and you're going to have PMI. Those are all the factors when it goes involved with your payments. But when we're pre-qualifying you, we're going to make sure that you qualify. We're going to give you the payment that you qualify for. So you're going to have a good understanding of what that monthly payment's going to be. You can go to the next slide, Chris. So the home style rehab program, I'm sure a lot of you guys out there have heard about, oh, geez, what about a rehab loan? I've heard so much about rehab loans. So there's two types, and I'll talk about the 203K, which I'm sure many of you heard of. The home style is the conventional version of the rehab loan. So you can lend up to 95% of the value of the property. You can go up to 2 units, right? Your credit score can be as low as 620, and your debt ratios can be at 50%. So debt ratios. What are debt ratios? Well, if you make $1,000 a month, the max amount, and I know I'm going little numbers, but I like little numbers because it's easy for me to do math in my head. That means that your mortgage payment and all your payments of your creditors or other bills can't exceed $500 for the month. So the more you make, obviously, the higher your debt ratios are going to be. But that's one of the factors when we talked about income and expenses. That's one of the factors that go into it. So the home style loan is set up where, let's say you go into a house and you see it needs some work, or it's a foreclosure. And I know you guys haven't seen any foreclosures in a long time, probably because there's a moratorium on foreclosures. No lenders can foreclose on anybody right now, and they haven't been able to since August of last year. So what happens is you go in and let's say, oh man, you need a new kitchen, there's a furnace, there's all kinds of things that need to be done. Well, you could apply for a rehab loan, and what would happen is you'd have to get a licensed contractor, and a licensed contractor can't be Uncle Joe, Uncle Louie. It can't be a relative. It'd have to be a licensed contractor would come in there and give you a bid on the items that need to be repaired. They would take those items. They would bring them back to us. We would give them to the property appraiser. The appraiser would appraise the property subject to those repairs or those remodels that are going to be done. So house you buy for $100,000, you're putting, say, another $20,000 into it. They'll probably appraise the house $120,000 given, right? So it's repairs plus the appraised value as is. I'm good, Chris. You can go to the next one. So federal loans, right? So federal loans is 3 different types of federal loans. You got your VA loan, you got your FHA loan, and you got your USDA loan. So I'm going to cover these. These are government-backed loans is what they are. So lenders do them because, hey, they're backed, right? They're fully insured by the federal government. So you can go to the next page. So VA loans is probably the best program out there. So if you're a vet, thank you for your service. But these programs, you can go up to 100% financing on them. And no down payment, right? Which is a real cool thing. There's no PMI, so you don't have to worry about that PMI factor involved with it. If you're a disabled vet, any sort of disability, they waive what they call a funding fee, a VA funding fee, which is upward of about 2%. So it's about 2% of the loan amount, which you buy a house for $100,000, it's going to be about $2,000. It's not something you have to come out of pocket with. You can actually include it in the loan. But if you have any sort of disability, it is waived. Great program, especially if you don't have the down payment money. But remember, you still got to think about closing costs and escrows. Those are separate from 100% of the financing. So, next slide. FHA, right? Another great program. Right. The great thing about FHA is you can put as little as 3.5% down, and you can get up to 4 families. So anywhere from 1 to 4 family units, you can actually put as low as 3.5% down. There are condos that are FHA approved, and people get a little scared about, well, if you went onto the HUD website and you looked at approved condos for FHA, probably very few of them have them anymore. But now what they have is they call spot approvals on condos. You can actually get a single unit FHA approved by itself. So don't fly away from a condo just because it's FHA. You can get a spot approval where FHA approves that individual condo. The complete complex does not have to be. And debt ratios with FHA loan are a little bit more liberal, where you can go as high as 55%, meaning, so we talked about the 50% factor, where here you could have 45% of your income left over. So it's a little bit different. It's a little bit more forgiven. And it could be something as simple as make $1,000 a month. You could have $450 left over after, and you're still qualified for a loan with FHA. Scores go as low as 580. Typically don't want to go below 580. There are programs out there. I just don't offer them, where if you're below 580, typically FHA, you can take 10% put down if qualified. We stick to the 580 and above. And co-signers can be non-owner occupants, which is another good thing. So mom and dad can actually not only gift you money, but sign with you. If they really want you out of that house, they're doing all they can to get you. I think that's my next trip with my kids. So the 203K rehab is kind of what we talked about, like the home style. The difference between the rehab for 203K and the difference between the home style is one's conventional, one's FHA. You can go up to 4 family units on a rehab for FHA, which is cool too. So you could actually fix various units from it. 3.5% down, as low as a 620 credit score. Again, you need a licensed contractor to give you the bid. And it is a one-time close. So it's not where what will happen is, let's say you do this particular loan. Let's say there's a $20,000 in repair that's going to be done. You can actually close on the home, and they'll distribute money as the contractor is doing the work, making the repair. So you can actually live in the home, and the contractor can be doing the work, and the money's going to be distributed as they do the repairs or the remodel for you. Should I stop and is there questions, or am I just ripping right through?
Chris, are there any questions?
No, there aren't any questions yet. If anybody does want to ask questions, they can do so by clicking the chat button or the Q&A down at the bottom, and panelists will be able to answer you.
Cool. Well, hell, I'll just keep going then. I'm just having some fun now. So the last product is the USDA product. So this is always a little complicated every time we do a seminar in New Britain, because you try to look at USDA areas and you try to figure out what would be the closest to the New Britain, Meriden area. And you start going east, west, so on. So I'll tell you this, it's a great program where it's 100% financing, but you have to live in those areas. So I'm trying to remember, of course, I don't have the map in front of me, but Joe, where's USDA closest to?
I would say like Harwington, Burlington area.
Ellington, Tallinn.
Yeah.
Yep.
Yeah. So those areas. So if you could actually bring up USDA.gov, and you can actually get the website, and you can actually pull it up, and you can see the USDA areas. Now, there are income requirements on that as well. And if you go to USDA.gov, there's actually an income calculator in there. You can actually put in number of family members, what's your income, and so on and so forth. And it will tell you if you qualify. And heck, I think a family of 4 is like $120,000. So great program. The PMI is lower than the average. It's like 0.35, I believe, on a loan. So 100,000, 350 divided by 6, about $58 a month. So actually less than that, right? 6, that's 12. I guess my math is going to hell in a handbasket with my gray hair. But it's in those areas that you're out a little bit off the beaten path. You have a 4-wheel drive, no big deal. And it's not that extreme, because you like Ellington, Tallinn, those areas, they're right off 84. Harwington and Burlington, I don't know where the hell they are.
That's like right above Bristol area.
Yeah.
Is Harwington and Burlington.
Great program though. If you want the burbs, great program to apply for.
Yeah.
Oh my God, look at that. I ripped through that in a couple minutes. So just a couple things, guys. So I'm going to ask you, when you do this, right, I would expect you guys,
Mark,
everybody that's
we
on
have
this.
a question.
Yeah, let me just finish this and now I'll hear whatever question they got. So what I want you guys to do is two things, right? I want you to go on the Achieve website and apply, right? I want you to apply because there's two things that are going to happen, right? One is I'm going to be able to pre-qualify you and I'm going to tell you what you qualify for and basically tell you what you need to do. The second thing is if you don't qualify today, what I'm going to do is I'm going to give you a roadmap that's going to lead you to getting qualified. And I can't tell you how many people that I couldn't pre-qualify a few months back. And today I'm pre-qualifying. They're out finding houses and buying houses. So best thing to do is to apply. If you're truly interested in buying a house, go on the Achieve website, apply. It's real easy to do. We'll pre-qualify you or we'll give you a roadmap to success. Go ahead, Sharon.
So the question we have is from Elizabeth. Elizabeth would like to know, with a first-time home buying program, are you limited to certain areas?
No. Buy anywhere. Hope that
Okay.
answers it.
Are there any other questions for Mark before we move on to Joe? You're welcome, Elizabeth.
Are we good to go?
I think so, Joe. I'll let you know if any more questions come in. Thank you. And now we have Joe from Lux Realty, who's going to go over all the wonderful real estate information I'm sure you'd like to know.
Yes. Thank you, Sheri, and great job, Mark, as usual. So quickly, my job in this process, not quickly, but overall job in this process is to meet with you and determine what you're looking for in a home, help you find the home, and then walk you through the entire process from start to finish. So what we typically like to do is either we can meet at a local coffee shop, or you can come into our office, which is located in Newington, right on the New Britain line. And we can meet here and sit down for 20, 30 minutes tops, go over what you're looking for in a home and get you set up on what's called the multiple listing service, which is the main hub for all listings. So if you're beginning to become curious for home ownership and you're starting to browse online on some of those websites like Zillow or possibly realtor.com or Trulia, or there's so many of them now. Well, they all pull from the same hub, which is called the MLS, the multiple listing service. So we could actually hook you up directly to the multiple listing service. And every time a new listing comes on the market that fits what you're looking for, you will get an email alert right to your phone or your computer. And then you can text me, you can call me, you can email me. We work 7 days a week here, and we can go out and set up a showing for you. Once we find the right property that you're looking for, we would write an offer. That would be our job to write your offer for you. Put all the terms right in front of you so you know what you're getting into. And something that Mark and I do often is that I want to talk about today is closing costs. I know we touched base on that a little bit in the beginning, but I wanted to familiarize you with what closing costs are. And I'm sure Mackenzie might go over this a little bit too. But what closing costs consist of is prepaid taxes, your homeowner's insurance, any fees associated with the loan, and any of the attorney fees. All that wrapped together is called closing costs. And we can actually ask the sellers to contribute money towards those closing costs, so it's even less money out of pocket for us. So for a quick example, that FHA loan on a $200,000 house, your down payment at 3.5% would be about $7,000. And we can ask the sellers to contribute. Mark, is it up to 6% of the sales price for closing costs?
So FHA is 6, conventional is 3.
Gotcha. And the reason I stress on that so much, it's just very, very popular to ask for sellers to cover closing costs. So if you have any questions about that, just feel free to reach out. It's a very popular topic, so I'd like to put that out there in the beginning. Once we go under contract on your house, then we'll perform the home inspections, which was on the previous slide. That's when myself, you guys, the home inspector, we all go out to the property and we do a thorough inspection on it. If the property has a well, we check the well, we check for mold, radon, any asbestos in the property. We do a very thorough inspection, plumbing, the electrical, the roof, the siding, the foundation. Everything is done on site, and it's good for the buyers to be there as well. If any issues come up during the home inspection, from there, we could always ask the sellers to give us a credit. We can ask them to lower the price of the home. We can ask them to make any repairs that we feel are necessary prior to closing. And if we're unable to come to an agreement, we're able to get out of that contract and get our deposit money back 100%, which unfortunately this does happen sometimes. And again, it's our job to protect you throughout the entire process. And if it doesn't work out for inspection issues, you do get your deposit money back 100%. If it does work out and we move on to the next step, that would be what's called the appraisal. And that's when somebody from the bank comes out to the property in person, and they just make sure that what you're paying for the property is fair market value or even greater. Sometimes on that $200,000 example home, sometimes the appraisal will come back at $205,000 or $207,000. And that doesn't mean you have to pay $205 or $207. It just means that you were able to negotiate yourself a bit of a deal where the market value is higher than what you were able to purchase the property for. And on the reverse end, if it comes back lower than $200,000, you do not have to move forward with the transaction. You can ask the sellers to come down on the purchase price. So the appraisal is a very important part of the process as well. And when we meet and we go over the type of home that you're looking for, and we familiarize yourself with which type of loan you'll be using, there's a couple other things that need to, the condition of the house needs to be in a certain overall condition for some of those loans that Mark talked about. Mark, FHA is a popular loan, wouldn't you say?
Very popular.
So with the FHA loans, there's a couple conditions with the appraisal. Chipping paint, would you think chipping paint comes up a lot?
Chipping paint comes up a lot. You just got to be, more or less, it's usually health and safety issues you got to be concerned about. Chipping paint's usually pretty easy, but chipping paint's up there.
Gotcha.
Handrails for
Yeah.
stairs, random handrails.
Yes, handrails for stairs. It falls under a safety issue. So not to take up too much time, but the house for an FHA loan, which is a very popular loan, it just needs to be in good overall condition. And we can go over that more in person when we meet. So after the appraisal is complete, from there, we would set up a closing with Mackenzie's office. She would contact you, and we would set up a day and time for the closing to take place. And maybe an hour or two before the closing, we would perform what's called a final walkthrough, and we will go to the property. If there was any repairs that needed to be made prior to closing due to the home inspections, we would make sure those repairs were made. If we asked any licensed contractors to make those repairs, we would verify that the work is done and we have a copy of the invoice for you. From there, we will go to the closing attorney's office together. We will sign your paperwork with Mackenzie in person. And from there, you own the house. You can sleep there that night. And that overall is the process of purchasing. Again, I don't want to take up too much time, but if anybody has any questions at all, we can go into further detail during a buyer consultation.
Thank you, Joe. If anyone has any questions for Joe, if you'd like to chat those over now. One thing that Joe did not discuss, a lot of you are in the market currently where you are selling one home and purchasing another home, or keeping one home and looking to purchase another home. Joe can also help you through that process as well. Joe and his firm can help you with listing your current home and selling that home, as well as the purchase of your new home. So Joe will be the person who would take care of you through your entire transaction and help you through the ins and outs if that's something that you are looking to do as well. I know that not everyone on the call is a first-time buyer. Some of you are looking to upsize, downsize. So that is something that Joe can help with.
Absolutely. Thank you for mentioning that.
Perfect. So now we have Miss Mackenzie Angels, who will go over her part in helping you get through the home buying process.
Hi, everybody. Thanks for joining. This is my first seminar with Achieve, but definitely not my first time working with them. I'm doing a lot work with them so far, but what I wanted really just concentrate on is my role in the process from the time you get under contract with Joe until you come to the closing table on the day of closing where you would actually purchase the property. So our main objective is to provide you with what's called clean title. What that means is you're getting title to the house in the form of a deed conveying the property from the sellers to you so that there's no mortgages on it or taxes due or any outstanding bills or liens due on the day of closing, so that when you get the property and purchase it and it's in your name, the only liens that would be on it would be your new mortgage and then taxes and of course your bills going forward from that day. So how we do that, I'll just break down the timeline. So when you finally find the house, get under contract, your offer gets accepted, and you have a fully executed contract with Joe, he will send that to my office. I would open the file in our system, print the contract, and then call you to go over the contract, which you should be familiar at that point with, since Joe would review it with you before they send it. And we'll just go through the entire contract. So the deposits that you'll be making, usually when your offer first gets accepted, you would send your first deposit. And then if there's a second deposit, you would send that following the inspections that Joe discussed. And then once you complete your inspections and you've negotiated terms based on things you want repaired, fixed, replaced, or a credit due to, so you can make those repairs. Once you come to that agreement, you or your realtor would let our office know, okay, we've completed inspections. We're going to give our second deposit, if there's a second deposit, and we're going to continue to move forward with the loan. At that point, that's when our office would order what's called the title work. And what that is it's a title search on the property that Mark mentioned earlier. You're usually waiting on title work or appraisals. So the title work is a search on the property, on the land records of the town and the address that you're purchasing, to see what current liens are on it. So the sellers will have mortgages on the property or outstanding property taxes, or even sometimes if there's a water and sewer lien or assessments, or if you're buying a condo, we make sure that the HOA fees are paid up to date and all that good stuff. So what we do is it generates a report out. We see all of the liens, any encumbrances like outstanding water and sewer, taxes, etc. And we send that report to your lender and also to the seller's attorney's office. So you're represented by one office and then the sellers are represented by a separate attorney's office. So we would send that title report to the seller's attorney's office, and it's their obligation and responsibility to make sure that all of those liens are paid either prior to or at closing. A couple random things that would come up would be judgment liens. for outstanding medical bills or anything like that. Anything affecting the title to the property, we'll make sure it gets paid and also released. So it's off the land records and off the property so that you would never be responsible for those debts. So once we get the title work back, send it to the lender, send it to the seller's attorney's office, then we're kind of playing a behind the scenes role, collaborating with your lender and your realtor to making sure those repairs that you've negotiated during inspections are completed, making sure that we're getting the paid receipts from the sellers, that everything was completed, but also that it was paid for. And we have a paid invoice from whoever completed the work, because we never want any issues at the walkthrough that Joe mentioned. So right before you come to the closing, you have that final walkthrough. That final walkthrough is really just to make sure there wasn't a huge hole in the wall behind the TV or stain on the floor under a rug that you wouldn't have seen at any of your showings. So the final walkthrough really should just be a one more time walking through the property with no issues. You want it, you want to buy it, you want to sleep there that night, and you come to the office to sign. So we really try to be proactive to making sure any big ticket items, for example, furnace repairs, septic repairs, well repairs, anything like that, are completed at least 5 days before the closing, and that we have those invoices that they're paid. So once all of that is all set and we've got the title search, you'll receive what's called a loan commitment from your lender. So the lender will issue you loan commitment stating you are completely approved for the loan. There might be a couple outstanding conditions like verifying employment or your last pay stub that was most recent, or and that the appraisal is in and that the property is appraised at or above the value that you're purchasing. So once you have that loan commitment, then the final couple conditions from the lender will come in from you. And while they're requesting these items from you, we would always ask to try to get the lender the items that they're requesting as quickly as possible, because they can only work as quickly as they obtain what they need in order to continue the loan moving forward. So things like that have kind of delayed closing sometimes in the past. So we've seen repair issues delay closings if we're not confirming that those repairs have been made in time, or, you know, the lender still needs your last pay stub or a bank statement or anything like that. So we always try to encourage borrowers to get the lender everything they need as quickly as possible, and in the form that they requested in, you know, tax returns, things like that. So once you've got the loan commitment, you'll be issued what's called the clear to close. Once we get that clear to close, that's when we can schedule the closing. So on that original contract that the realtor fills out and has everything in it, there's a couple of dates. So they give you an inspection date that you need to complete inspections by. They give you a mortgage contingency date, which is when your mortgage commitment needs to be in. And then they also provide a closing date. That closing date on the contract is always tentative. So that's a target date that everybody's shooting towards. They want to close on that date. Everybody's, you know, trying to do that, but sometimes life happens or the date falls on a holiday. And you can't close on a holiday because the banks are closed. So we try to target that date, but it's not officially scheduled until you're scheduled with our office and with the seller's attorney's office. So we always tell people, you know, don't schedule your movers, don't take your day off from work until, you know, you're officially scheduled with everybody. It's harder to reschedule movers than it is to schedule them in the first place. So always wait for that, for your attorney to let you know, okay, you've got a time set, a place set, and we'll be good to go that day. So once the closing is scheduled with our office, then you would schedule your walkthrough with Joe, and you would go to the property, again, do that walkthrough, make sure everything is good to go. No issues there. You would come to our office, and then we would sign your loan documents. So a closing is essentially just you going through about a stack that thick of papers. It'll take about 40 minutes with me. Some other attorneys might take you an hour and a half. But you just go through the closing documents. I walk you through every single document you're signing. We do a complete breakdown of the closing disclosure, which is all of the figures. So it's your loan amount, your interest rate, your monthly payment, your escrows, a line itemization of every single closing cost. So every penny that you're paying is accounted for on that closing disclosure, and we'll run through it as many times as necessary for you to understand, where your money's going and what it's for. So we go through that, we sign the note, we sign the mortgage, and then just additional loan documents that each specific lender requires. Like Joe said, once we finish signing, you're essentially closed. Our office receives the wire in for your loan amount from the lender. And then we send the proceeds to the seller's attorney's office. Traditionally, the seller's attorney's office and the sellers would come to the closing, they would sign there, we would exchange documents, we would get your warranty deed and all of the other documents that the sellers needs. But because of COVID, we've been doing overnights and wires. So at the closing now, it's really just myself and whoever's signing. We do open it up to realtors if they want to come, loan officers if they want to come. But with COVID, we've just been limiting it to whoever needs to sign will arrive. And then the seller's attorney will send us the documents. We'll make sure we have everything we need. And then we will get your warranty deed and your mortgage recorded on the land records the next day, meaning that you are now the official owner of the property. And once we send the funds to the seller's attorney's office, then you are considered closed and you can move in and, like Joe said, sleep there that night and make it your home. So that's about it. And I will touch on, Sheri touched on simultaneous closings. So if you are selling and buying, we can do that too. So we can do it on the same day. So if you were to sell and buy, we would just coordinate both contracts. We would represent you in your sale. We would sign the documents for you for your sale, and then we would sign the documents for your purchase. So we would coordinate all of that. And what we could do is, a lot of people who sell and buy simultaneously or within the same week, they use the proceeds from the sale toward the purchase. So we would just hold the proceeds of your sale and then apply them toward your purchase, and then either cut you back a check for whatever's left over, or you would bring the additional balance sort of to the closing. We would just generate the funds that way. But we, in short, handle the title work to make sure you're receiving a warranty deed that states the only lien on it following closing is your new mortgage and taxes and all your bills going forward. And that all of the funds, we disperse all of the money. So everybody gets exactly the amount they need, and you have a good understanding as to what you paid for, and what everything cost. So again, like Joe said, if you have any questions, I am more than happy to chat on the phone, go over anything with you, and all our contact information will be available to you too.
Thank you, Mackenzie. We do have some questions that came in. One is pertaining to you, but I know Mark did cover it a little bit. One of the questions is, how much is your attorney's fees?
Sure. So for a sale, it's a flat rate. It's $725. And then for a purchase, it's $750, plus you have to pay for the title search. And then also our office, any attorney's office, has to issue what's called title insurance that Mark touched on earlier. So title insurance is purely based off of the purchase price of the property. So it totally depends on what the purchase price of the property is. That's not a fee to us. That's if you closed with any office, any lender, they all require that you have title insurance. So that would just be a set fee that we would give you an estimate of in the beginning. But yeah, so it would be the $750 plus the title search fee of the $120. But those are all estimated into your closing costs. So those are all considered in with the lender fees, underwriting fees, all of that. So if you do get a closing cost credit, it's usually included in that. There's no separate payment to our office.
Perfect. Thank you, Mackenzie.
No problem.
Mark, we do have a couple questions that we can piggyback together. One of the questions is, how do you know how much you can get pre-qualified for? And the second question is, what is the difference between a pre-approval and becoming pre-qualified?
Well, you said piggyback. I figured you're gonna field it. That's so.
Well, I can if you'd like.
So what you get qualified for? So one of the things I do when you're applying or getting pre-qualified is I want to have an idea where you want to buy, because typically I want to look at the tax rates in those particular towns or cities. and what the what you're going to be paying monthly as far as what the taxes are going to be, because that, unfortunately, in Connecticut, that dictates a lot as far as loan amount. So I'll ask you that at the beginning. And so it's obviously it's based on your income. It's based on what your outgoing bills are, right? So what your other expenses are. And so we take that number, we factor in your homeowner's insurance, we factor in your PMI. If you're not putting 20% down, we factor in the taxes, and we come up with a number. And it's an estimate, right? Because you could find a house down the street that it might be a little bit more, it might be a little bit less, where we could possibly look at it and say, yeah, you could qualify for this. Because I'm going to tell you, probably at the end of the day, what you're looking for as far as a payment goes, because I always use this term house poor. You don't want to be house poor. And the definition of house poor is you buy a house and that's all you can do is go to your house. You can't go out to dinner. You can't go on vacation. You can't do anything. You're just limited to paying for that mortgage. So we'll give you the number, right? If you have a number in mind that you're looking for, we'll see if we can qualify you for that number, but we'll pretty much give you the number that you'd be good for. Difference between a pre-approval and a pre-qualification. So pre-qualification is typically what we do is that we'll run your credit, we'll take all your information, and we'll run it through what they call the Fannie Mae website, which is a desktop underwrite, which goes to Fannie Mae. We'll come back if you get an approved eligible. That's like the biggest factor when it comes to doing a conventional or FHA loan. And we'll give you the pre-qualification based on the information you provided. The difference with a pre-approval is we would take your information and you'd have to give us certain documentation. You'd have to give us bank statements based on what you have in your bank accounts. You'd have to give us, documentation of your income. We'd have to look at a 2-year history of it as well. And we would literally take it to an underwriter for them to underwrite. So the difference is an underwriter is looking at all that documentation and giving you the pre-approval. Hope that makes sense.
Thank you, Mark. The last question that was asked is how accurate is Zillow in measuring values? As Mark and I have seen lately, Zillow can be on point or Zillow can be off quite a bit. We have noticed lately that Zillow has been inflated, and the values on Zillow are not necessarily as high, or they're higher than what the homes are coming in at. So if you have questions, Joe is a great resource as to what market values are on homes. He does have access to all of the listings, and he can give you some comps in the area or other homes that have sold to kind of give you an idea of what the home values are. So Joe is an excellent resource as far as doing that. So that was all the questions that I saw. Oh, let me just see.
A question always gives you another question.
Yes, it does. Chris, can you please move to the next slide? So in the interest of time, it is currently 5:56. We did send out a survey to our members, and these are some of the questions that were asked of us. So we wanted to make sure that you had this information available. So the next couple of pages does cover this information. We will make sure that this presentation is posted on our website by the end of the week to make sure that you have the resources available, contact numbers for Joe, Mackenzie, and myself. Also the answers to these questions and the ability to listen to this seminar again, in case there was something that you'd like to hear over. Chris, next slide, please. One more. So this information is on our website. If you notice, there are 6 tabs across the top of the website. If you go to loans, and there'll be a drop down for real estate, and you'll see our mortgage page right from that landing. Once you click real estate, it will give you the opportunity to look at our different loan options that Mark discussed this evening. Please, 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 we do suggest you submit the application. That would be the best way for Mark and myself to help you find out what you can qualify for today, or how we can help you get qualified, as Mark referenced to earlier. So I just want to give another minute or two for questions to see if there's anything that we missed. Chris, do you see any questions coming in?
No, I think we got them all. The questions that came in have been answered. Yep.
Okay, perfect. Well, I would like to thank Mark, Joe, and Mackenzie, and Chris for joining us this evening. As always, we do look forward to helping you in any way that we possibly can. So please reach out. My email, Joe's email, Mackenzie's email are all available. We will be happy to answer any and all questions that you have. We love helping our members find their homes, and please reach out. We'll help you in any way we can. And we thank you for your time this evening. And thank you for choosing Achieve. Good night, everyone.
Thanks, everyone.
Everybody.